Welcome to the Monday edition of Tech Stocks Daily, where the thrills of Wall Street meet the innovations of Silicon Valley. Today we're kicking things off with Microsoft's big investor buzz, as whispers of AI advancements ripple through the market. Then hang tight as MicroStrategy goes on a Bitcoin binge worthy of reality TV drama, adding a whopping 15,350 Bitcoins to their vault. But that's not all. We'll dive into the legal entanglements at Toronto Dominion Bank, facing hefty class action lawsuits, and Xerox's own courtroom dance over securities allegations. From bullish bets to courtroom chaos, today's episode is a whirlwind for tech stock enthusiasts. Ladies and gentlemen, tech aficionados and Microsoft fans, gather around. Big news vibes are pulsating out of Redmond, and no, it's not about Clippy finally getting its well-deserved spin-off. Microsoft has been making headlines today with not one, not two, but a trifecta of tantalizing tech tidbits. So grab your virtual cup of coffee and let's dive into the good stuff. First up, spotlight on Wall Street, where Microsoft is seeing some highly unusual options activity. What in the tech world, you ask, does that mean? Investors with pockets as deep as the Mariana Trench have started taking a keen interest, suggesting the anticipation of something huge. With options contracts flying around like confetti at a New Year's Eve party, it's noteworthy that a whopping 83 out of 107 options were calls, meaning these investors are betting on Microsoft's value taking a pleasant ride north. So what's the mood? Surprisingly split. Some bears are also eyeing possibilities, but bulls are clearly in the feeding frenzy, perhaps predicting juicy developments. Speaking of juicy, remember when ChatGPT blew our collective minds? Enter Sam Altman, the insightful founder of OpenAI and professional disruptor of the tech piece. Today, Microsoft stands shoulder to shoulder with OpenAI, benefiting richly from their investment into these AI wonderkinds. With OpenAI revealing a pivot from their original biography of ethos to a more capitalist-friendly model, they just opened doors, if not bank vaults, wider for Microsoft. The future could hand over keys to unlocking anything from AGI, artificial general intelligence, to more dazzling iterations of their skyrocketing products. And if you're not overwhelmed yet, Microsoft also rings in some wintry cheer for data nerds through a splendid alliance. Anomalo's AI-powered data quality platform just dropped its debut on the Microsoft Azure marketplace. That's right, the data quality guardians at Anomalo are strutting their tech-savvy stuff on Azure, making it a breeze for businesses to maintain crispy data clarity without breaking a sweat or keying in endless lines of intricate code. As Microsoft Azure continues to pave paths with revolutionary cloud solutions, with Anomalo's insights, finding data quality woes might just be as out of style as pagers and floppy disks. So there you have it, a dazzling day for Microsoft both on solid and virtual grounds. Whether on the gambling floor of investor action, futuristic corridors of AI advancements, or crafting data success stories, Microsoft is undeniably making newsworthy strides. Prepare yourself for what could just be the start of a big tech crescendo. Until then, may your Windows never crash, and may your Xbox wins be ever glorious. Hey Tech fam, buckle up because today we're diving into the financial whirlpool that is MicroStrategy, and oh boy, it's a Bitcoin bonanza over there. First up, MicroStrategy is going all in on Bitcoin, and I mean like loan shark, selling your soul level of all in. The company just gobbled up an additional 15,350 Bitcoins for around $1.5 billion, purchased at an average price of 100,386 TORs per coin. This boosts their crypto vault to a jaw-dropping 439,000 BTC, equivalent to more than $46 billion at today's sky-high Bitcoin prices. CEO and Executive Chairman Michael Saylor, who's become something of a crypto rock star, was practically bursting with pride. He posits Bitcoin as the modern-day equivalent of burying treasure in your backyard, only way better. Why bother with gold, real estate, or stocks when you can be the proud owner of 2.1% of Bitcoin's finite 21 million coins? Talk about monopolizing. But wait, there's more. MicroStrategy didn't just find a forgotten Bitcoin fortune map or order an extra rush shipment from Satoshi himself. They've been diligent explorers in the fiscal world, selling an additional 3.88 million shares of their own stock to rustle up the necessary 1.5 billion. This venture is part of a grand plan to raise $42 billion to continue their insatiable Bitcoin acquisition frenzy. I'd be remiss if I didn't mention that MicroStrategy's bold moves are causing quite the ripple in the market. Their stock's price has soared more than 600% this past year alone, with lots of whale-sized investors lining up to ride the wave. In recent trading, large market movers have been placing asymmetrical bets via calls and puts within a broad price range, clearly suggesting they expect some big-time volatility. If that isn't enough excitement, MicroStrategy just got its invitation to the cool kids table, earning a spot on the prestigious NASDAQ 100. This listing, effective December 23rd, essentially endorses the sky-high acceptance of crypto within mainstream establishments, echoing across financial districts like the sound of digital coins clinking into virtual piggy banks. If all of this sounds like a dazzling crypto soap opera, it's because MicroStrategy is playing their risks like a fiddle, striking a high note even when others might clutch their pearls. As they chase the Bitcoin dragon, notable analysts remain upbeat. Most industry experts still give a hearty thumbs up with confidence in their stock, setting target prices ranging up to $650. To sum it up, MicroStrategy's soaking up Bitcoins like they're internet cookies, and the market's watching every nibble. They've got shares, bitcoins, and market headlines blowing up like a well-placed code in cyberspace. Stay tuned, because with twists like these, the saga is far from over. Today in the tech and finance world, the Toronto Dominion Bank, commonly known as TD, grabbed headlines with not one, but two class action lawsuits being announced. This emerged as a hot topic due to some hefty allegations regarding TD's failures in their anti-money laundering program. These legal proceedings seek to represent a broad swath of investors who claim to have been misled by the bank's public statements, which allegedly did not adequately disclose the risks and deficiencies in their AML setup. The first lawsuit, announced by Braunstein, Gewirtz & Grossman LLC, highlights that investors who acquired TD securities between late February and early October 2024 faced losses primarily due to these alleged misrepresentations. The law firm claims that during this class period, TD's officers failed to appropriately disclose significant issues with their AML protocol, a faux pas in the banking world that can have serious financial and reputational repercussions. When the company did come forward on October 10, 2024, revealing the accusations and subsequent settlements reached from the U.S. investigations, it reportedly took a beating from the stock market. TD's stock plummeted from $63.51 to $57.01 over the course of 2 days, a decrease greater than 10%. That's less banking on success and more like get yourself a life jacket. We're going down, folks. Similarly, Levi and Korsinski LLP is opening the gates for a parallel class action against TD, citing securities fraud that impacts investors who've held shares from March 2022 through October 2024. In what can only be dubbed a financial drama episode, Levi and Korsinski elaborated that TD paid a jaw-dropping $3.09 billion as punitive payment, had an asset cap imposed by U.S. authorities, and is now wrestling with rigorous approval criteria for their operations. These actions stem from TD being noted as the largest bank in U.S. history to plead guilty to Bank Secrecy Act failures, not to mention making it to the notoriously infamous list of being the first U.S. bank to fess up to conspiracy and money laundering failures. Turbo snakes on a fiscal plane, am I right? The coordinated lawsuit efforts by both Braunstein, Gewirtz & Grossman LLC and Levi and Korsinski LLP not only aim at potential recovery for the devastated investors, but also solemnly underscore the severe implications of failing robust AML practices. TD's latest entanglements highlight both the complexities and necessities tied to adeptly navigating compliance and regulatory landscapes in banking, particularly as it interfaces more intensely with tech innovations and digital transactions. While investors have specific deadlines to join these class actions and seek the lead plaintiff positions, what we're really seeing here is a banking mammoth trying to dodge the falling boulders of legal ramifications. And as these events unfold, it's likely to put a significant mark on the regulatory standard conversations, not only for TD, but for the broader financial and tech-driven banking sector. Today, Xerox Holdings Corporation, a company you've likely known for their historic impact on copying and printing technology, has slid into the hot seat of legal drama. This isn't about paper jams or finding replacement toner. Instead, we're diving into murky waters of securities litigation. Two separate law firms, Braunstein, Gewirtz & Grossman LLC and Levi and Korsinski LLP, have announced they're gearing up for a class action lawsuit against Xerox. The plot thickens, as both firms are calling on shareholders who suffered losses between January 25, 2024 and October 28, 2024. Why? They claim that Xerox made some misleading and false statements about their operations and prospects during this period. So you might be asking, what specifically is at the heart of these allegations? Here's the scoop. Xerox allegedly failed to fully disclose some rather pivotal changes and their repercussions. First, following a considerable workforce reduction, Xerox reorganized its sales teams and set them up with new territories and account coverages. Essentially, picture this. Xerox's sales force, which was supposed to sell new products like hotcakes and phase out older ones, hit a speed bump. This supposed shakeup in internal logistics ended in stunted sales force productivity, holding on to old stock like your last pair of socks without holes. And yes, this allegedly caused delays in rolling out those much-anticipated new products, leading to decreased sales and revenue. In light of these allegations, the cherry on top is that Xerox kept giving their shareholders the all clear. According to these lawsuits, Xerox's assurances that everything was rainbows and butterflies lacked a reasonable basis given the internal chaos the company was actually experiencing. Both law firms detail elaborate plans to help shareholders potentially affected by these supposed missteps. The deadlines to join these lawsuits as lead plaintiffs are January 20th, 2025 and January 20th, 2025 for Braunstein, Gewirtz & Grossman LLC and Levi and Korsinski LLP, respectively. Now imagine witnessing such turbulence. Viewers, what are your thoughts? Have stories like these swayed your decisions when it comes to investing? Or do you see it as just another bump, typical in the business world? Additionally, if you were a Xerox shareholder, how would this news resonate with you? Would it motivate you to participate in these lawsuits? Share your perspective in the comments section below. We're eager to hear your views. Whether you're throwing caution to the wind and holding on to those shares or reaching for your lawyer's number quicker than I can say class action, your insight matters. Let's chat. All right, folks, let's unravel a bit of Wall Street magic with none other than MicroStrategy and its Bitcoin-studded antics. The reality TV drama that is MicroStrategy and its crypto rodeo has certainly earned its moment in the spotlight. So, you're toying with the portfolio and wondering, do I buy, hold, or hit eject? Let's dive deep. MicroStrategy has made a headline-snatching move by going all in on Bitcoin. They've redefined hole-in-one, bagging another 15,350 Bitcoins for a cool $1.5 billion. That's next-level commitment, akin to buying a lifetime supply of avocados when the toast might trendably decline tomorrow. Now, Bitcoin inherently is a roller coaster, one-stop adrenaline shot of an investment. It's subject to volatility that'd make a jelly-legged novice rollerblader feel stable. But this volatility is also where the opportunity lies. For many eagle-eyed investors, a stake in MicroStrategy can be as thrilling as a front-row seat at the crypto revolution or a valuable chance to ride the juicy profits of Bitcoin's recent price exhilarations. MicroStrategy CEO Michael Saylor aims to corner a slice of that finite Bitcoin cake. Think of it as strategic monopoly, but with much cooler digital cash. By betting on Bitcoin's enduring valuation both within and outside of blockchain enthusiasts, their stock has soared beyond accountantical naiways. And becoming part of the prestigious NASDAQ 100 is Melba and goose feathers to their stock salad. Absolutely scrumptious. However, it's crucial to keep in mind that while the infatuation with digital gold could pay off like a lottery ticket in a dream scenario, adopting a templated Pennywise approach could chomp on nerves, given the wavy likeness of Bitcoin's price chart. Not to honk too loudly on the caution bugle, but ensure you can stomach the shiftiness better than mid-ocean swells on a yachtsman's buddy's getaway. So, what's the sentiment? From this tech evangelist perch, a hold position might be wise. Why? MicroStrategy's adventures with Bitcoin are like investing in a high-stakes mechanical bull rider championship. It's ridiculous yet enthralling. If you already warmed seats at this wild rodeo, holding allows you to see if their Bitcoin moves yield future largesse. If considered stocks are lining up behind Bitcoin votes like papers ready for ink, stepping back might trigger either green or few stingers. Remember, this isn't one-size-fits-all and isn't investment advice by itself. Trusting your investigations and channeling intuitive intellect remains key. Explore diligently, gauge your risk, and consult financial experts before diving headfirst into the Silicon Ocean. Whether you choose to cheer along or play your part quietly, the only certain is adventure. Happy researching, and may the odds ever be in your spreadsheet's favor. What a whirlwind of a day on the NASDAQ, filled with bullish roars for Microsoft, a Bitcoin buying binge from MicroStrategy, legal rumbles hitting Toronto Dominion Bank, and Xerox's spin under the litigation spotlight. We've seen some hefty market moves, dramatic developments, and wild rides on both digital and litigation fronts. Whether pondering Microsoft's AI advancements, feeling the digital gold rush with MicroStrategy, navigating banking legality crises with TD, or pondering Xerox's courtroom tango, it's been a day stacked with headline-grabbing happenings. If today's recap revved up your tech-loving heart, don't forget to hit that like button, subscribe for daily tech thrills, and share this with your fellow market enthusiasts. Stay tuned, because we've got another exciting tech news video coming your way tomorrow. Your engagement fuels our journey. Thanks for being part of the ride.